Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Thursday, December 21st, 2006, and the market's closed. The sellers were out here today a little bit as the S&P lost 52 cents, or about 0.37%. The Nasdaq was down about 31 cents too. But if you look at the individual stocks, there was a lot more damage to some of these leaders than what the averages might have indicated. Let's take a look at the averages first, and then we'll take a look at some of those stocks. First of all, the S&P 500 continues to hold above the support that we've been looking at, 140.75 to 141. And if you look at a 30-minute time frame, yesterday I was saying that we've got this series of lower highs in here. But it's more neutral, kind of intermediate term. Well, we just broke this little uptrend line here too. Let's take it back to the 60-minute time frame, so we can see a little bit more clearly that this uptrend line has been broken. So there could be a little bit more selling coming, but again, 140.75 to 141 is the area where there's the most potential for some support in here. We've also, again, we've got this rising 50-day moving average. So until proven otherwise, this any pullback should be treated just as that, just a pullback within a primary uptrend, like we've seen in the Nasdaq 100. The Nasdaq 100, we saw the first signs of distribution about 2.5 weeks ago. The market is still locked within this range, came down towards the bottom end of it, near that 43.30 level that we've been looking at, and today's low was actually 43.21. We also had a test of the rising 50-day moving average, and I said what might bring about that test would be a continued breakdown in Google, and we did see further weakness in shares at Google. Now Google's really starting to make, I think, a lot of people nervous in here, although it might be setting up for a reversal too with this MACD divergence on the hourly time frame. I'm not going to suggest any trades in Google just because it's a little too volatile, and it's better suited for day trading, I think, than the majority of people out there. But if you look at the Qs once again, we've been looking at, a lot of people have been looking to short this market because the trend line has been broken. And what I've been consistently saying is a trend line break doesn't mean it's going lower. It means most likely that we have to correct these gains through time. The only thing that would make us concerned is a lower low. A lower low comes, I think, on a close below $43. That's what I would think would make me more concerned about this market. But for the last couple of weeks, I've been saying, looking at this 30 and 60-minute time frame, that it's just a mess in here, and it continues to be a mess. So the better opportunities continue to be within the individual stocks. We tried. Again, this shows the danger of trying to buy at a rising 50-day moving average. We tried looking for support there from Apple Computer. Apple failed to hold. Yesterday we got stopped out with a very small loss, about 45 cents, which is a half of 1%. Let's say you put 20% of your portfolio into it. It turns out to be a 10 basis point loss in terms of your overall account. Very insignificant. But I said yesterday it looked like the proper thing was sidelines in this stock right now, and hopefully you got out of it, because otherwise it continued to eat away at the capital in your account, and you're trading it based on opinion, not on fact. The fact is Apple is breaking down, at least for now. Maybe it finds support here in the next few days, but let's focus on the good stocks. The good stocks like CNTF. CNTF, we purchased at $9.50. We had raised our stop yesterday to $10.15. Let's put our stop at $10.20 now in CNTF. ENPT, we'd gotten involved in at $4.75. I suggested you raise your stop yesterday to break even, so you should have been out at break even in that one. Monster.com, we had also gotten involved in here at $46.50. I suggested yesterday that you raise your stop to $46.50, break even, so out at break even on that one. As far as the new stocks went, AMD, we were looking for a trade above $22 a share. It traded at $22 a share, but not above it, so you shouldn't have taken a trade. Go back and listen to that on strength above 22. So I did get an email of someone asking me, hey, Brian, what should I do with this AMD? I said, I don't know why you're in the stock. We were going to buy it above the resistance at $22 a share. I said sell the stock to the guy, so hopefully he did, because the stock was at about $21.80 when he emailed me. Let's take a look at the other one. CMOS, I'd suggested buying this stock above 513. It got above 513, but I also suggested a stop at 508. Today's low in here was 506, so that should have been stopped out with a loss of a nickel. MEDX, we were looking for a rally above $15.45. That never occurred. No reason to get involved in MEDX. Boom. We were looking for a rally first up to 65 cents. The high in there was 67 cents, and we were going to sell it short at 50 cents. So there was a good opportunity to sell this stock short at 28.50. Let's say our stop right now is 28.40 in boom. And we also got Teva, Teva. We were looking to get short that one below 31.50. That occurred right here. And our stop was then going to be at 73 cents, I believe, whatever it was that we didn't get stopped out. So I'd suggest that you lower your stop to break even at this point in Teva. I also suggested you look at oil. If it gets above 54.50, that it might be indicating a turnaround in there. Oil was weak today, so there was no move higher there. I also suggested a few of these other stocks to look at were ARQL, set on strength above 6 and a dime. That never occurred. CHRD, thought maybe this would get interesting above 335. Nothing happened there. ISPH, I thought maybe above 625 that we would see some continuation of strength. Nothing happened in there. And same story with OXGN that we were going to look at on strength above 495. That never occurred, so none of these trades really should have been taken today.